Hi, I'm Brendan Jenks, the investor coach here in Kansas City. And my role as an investor coach is to help you avoid negative activities or behaviors that are going to lead you down a road to poor investment results. So many times, messages in the media, as seen on the TV or the newspaper or even around the water cooler at work, will conflict with your investment philosophy. Making matters worse, if you don't actually have a philosophy about investing, chances are you're going to have a negative experience if you haven't already had one, because you're probably going to buy a product that someone has promised to make a killing in the market with, or to insulate you from volatility, such as an annuity. Those are getting very, very common. Remember, most people's investment portfolios either have way too much risk or no risk at all. And what I mean by that is, think of the analogy of a car. A car has to have an engine and brakes. So stocks are a lot like the engine and bonds are like brakes. Most people are driving around in cars with no brakes. Or on the flip side of the coin, they're driving in cars with no engine. And it's this latter situation where most people today have their money parked on the sidelines because they're afraid of what happened in 2008. So they're being subject to inflationary risk because their portfolios don't have any engine. There's no stocks to keep them ahead of inflation. So you're seeing a lot of variable annuity and fixed indexed annuity salespeople out there telling them that we can protect you from market volatility, and you need this product. Well, inflationary risk is a huge, huge concern, and liquidity is also another. Well, I saw this advertisement this weekend in the edition of the Wall Street Journal, and I want to illustrate to you how, if you don't have a strong conviction about your investment philosophy, ads like these are going to compete against you and kill your returns. So here's the ad. It's an ETF ad, and it says, "Go in with an exit strategy." Basically, the subtitle says, "Power shares ETFs give you intraday liquidity, so anything you get into, you can get out of, because when it comes to investing your clients, you're not just along for the ride." So the implication here is that activity is equal to control. Well, let's get back to basics real quick. The ETFs are essentially index tracking mutual funds. Going back to the 1970s, banks would use these products to hedge their funds. So ETFs have opened a new potential pitfall for individual investors to engage in hyperactive trading throughout the day. Unlike mutual funds that can only be traded once a day, ETFs can be bought and sold throughout the day. By design, the ETF is making it possible for you to own shares of the fund. You're not actually owning the stock or bond that the index is tracking. So yes, there's some tax efficiency there, but you can really lose your shorts, which is a technical term for losing money, by owning these ETFs. Since you don't actually own the stock or bond in the index, you're essentially trading your shares with other investors. Therefore, the price you pay can radically deviate from the actual value of the index being tracked. So products like these enable you as an investor to engage in activities, to have behaviors that are very costly to your investment performance. So while many believe, again, that activity is equal to control, this is an activity that you want to avoid. Here's my tip. Capture market rates of return in broadly diversified portfolios with the lowest cost possible. Index funds are a good step in the right direction, but I prefer my clients to own what we call structured asset class funds. These are designed to capture the highest amount of return with an academically measured level of volatility. So you don't have a car that has way too much engine, or you're not in a car with way too many brakes. So if you don't already know what the annualized rate of return is in your 401k, your Roth, or your IRA accounts, contact me so we can establish that baseline for you. I'm Brendan Jenks, the investor coach.